Assalamualaikum and hi, it's me NURLAILI BATRISYIA BINTI ISMAIL.
Hi, I am FIRDAUS bin DZARAWI.
Hi, my name is NURFARHANUM binti YUSOFF.
Hi, Assalamualaikum. I am NURUL AYUNI binti AZMI.
THP incorporated in Malaysia as private limited company as per Badan Ladang-Ladang Tabung Haji Sdn Bhd on 1972. Nevertheless, it changed the name with TH Plantation Sdn Bhd in 1997, which was listed on the main board in Bursa, Malaysia. TH Plantation Berhad is a Malaysia-based investment holding company engaged in the business of oil palm and rubber plantations. The company segments include oil palm plantations and forestry, which engage in producing fresh fruit branch, palm kernel, and crushed palm oil for the consumption of the Malaysian market. THP operates approximately 31 oil palm estates in its stable spread throughout Malaysia, as well as approximately 7 forestry plantations in Sabah. THP currently owns 38 estates and 6 mills, which managing more than 8,000 hectares of land bank. Ajinomoto Malaysia Berhad started its business operations in 1961 as Ajinomoto or monosodium glutamate (MSG) producer. It is one of the very first Japanese companies to be set up in Malaysia. Ajinomoto Malaysia Berhad has since grown into a dynamic food and seasoning manufacturer marketing diverse brand name that is trusted by Malaysians for decades. The Ajinomoto umami seasoning has become an indispensable item in almost every household. Be a global customer-centric halal food company to contribute in resolving people's food and health issues through their specialties and innovative solutions. Their aims to be a genuine global specialty company achieving sustainable growth by contributing to healthy lives and healthy planet. Hey there, have you ever heard any shocking issues about this one company?
What kind of issue? And what is it about? Is that interesting to know?
This issue?
These are two other issues of TH Plantation, which TH Plantation suffered loss and labor issue. Petaling Jaya TH Plantation Berhad suffered a net loss of 19.80 million during the third quarter end September 30, 2018. This compared with a net profit of 15 million a year ago due to lower price of the crude palm oil and palm kernel. The group said that the profit margin was significantly squeezed by lower price and volume during the quarters. The group fresh fruit bunch production sank 4% in the first quarter of 2018, but it was offset by a 24% drop in the average realized CPO price and 5% fall in the sale volume. The group bottom line was also negatively impacted by the lower fair values on government grants and change in fair value for forestry assets. It said it expects price to remain range bound in the near term, causing continued pressure on the profit margin for the palm industry.
Oh, but this is not only the issue, right?
The next is labor issue. The problem of manpower shortage in Malaysian plantation sector seems to be endless, especially in the oil palm industry sector, despite various efforts taken by companies involved and authority to safeguard the interests of almost 500,000 smallholders. According to industry data, 70% of workers in the palm oil sector are foreign workers, and currently there is a shortage around 37,000 workers in the industry, which could affect fresh fruit bunch production by 25%. As vigorous efforts were made to end this stagnant The spread of COVID-19 caused the situation to return to normal. Not only could the industry match any plan to solve the problem, but also could not bring the required number of foreign workers because the border had been closed. The situation get worse when the local themselves stay away from the industry for many years because farm work is considered as a 3D job, dirty, difficult and dangerous.
Firstly, the current ratio helps you to determine if you have enough working capital to meet your short-term financial obligation. A general rule of thumb for this current ratio is to have a current ratio of 2, although this will vary by business and industry. A number above 2 may indicate a poor use of capital. As you can see in the table and graph that I have provided in this slide, shown that the TH Plantation have a bad performance in 2016 and 2017. After that, it showed a good trend in 2018 and 2019, but it dropped to 1.97 in 2020. So this position of current ratio is unfavorable because the company has lower ability to meet its short-term financial obligation, as it has lower liquidity compared to Ajinomoto company that have a good performance from 2016 until 2020. Secondly, your quick ratio or this ratio is also known as the acid test, help to measure your immediate ability to pay your financial obligation. The TH Plantation and Ajinomoto performance from 2016 until 2020 is quite good because the ratio of these 5 years are higher than 0.5. Means quick ratio below 0.5 can indicate a risk of running out of working capital and a risk of not meeting your current obligation. While industries and businesses vary widely, 0.5 to 1.0 are generally considered acceptable quick ratio. In this ratio, the performance of Ajinomoto is better than TH Plantation. Thirdly, as you can see, this table and graph shown that the TH Plantation performance in 2016 was bad because they cannot cover the liabilities, but the next year the performance shown good compared to Ajinomoto company. This working capital is used by a lender to help measure the ability of a company to weather difficult financial period. Working capital is calculated by subtracting current liabilities from current asset. Due to differences in business and the fact that working capital is not a ratio but an absolute amount, it is difficult to predict the ideal amount of working capital for your business without making use the other financial measure.
Next is activity ratio. For activity ratio, I measure based to their efficiency, fixed asset turnover and total asset turnover. As you guys can see, for fixed asset turnover, the Ajinomoto Malaysia Berhad performed in 5 years is quite good. That show upward trend movement in 4 years earlier from 2016 until 2019, but decreased in 2020. Overall, Ajinomoto is good in generating net sales from its fixed asset investment. In 2019, Ajinomoto has reached the highest movement trend of 5.77 that could be considered good. While for TH Plantation, the graph showed the upward trend movement from 2016 until 2020, but in small number of ratio, I mean the value of ratio. This indicates that the performance has problem of generating sales. Also, it represents the lower fixed asset turnover more than Ajinomoto Malaysia Berhad. For total asset turnover, Ajinomoto fluctuate in all 5 years. However, in 2020, show the trend slightly decreased from the year 2018. That show their company maybe have some bad acquisition. Acquisition are attractive when, if they help a company maintain or increase its return. So Ajinomoto has reached the highest movement trend in 2016 for total asset turnover, while the lowest trend movement in 2017. For TH Plantation also fluctuate in all 5 years, but in small value of ratio. Besides, TH Plantation has reached the highest trend movement in 2020 compared for 5 years into generating revenue or sales. Overall, for activity ratio, show that Ajinomoto Malaysia Berhad is more efficient compared to TH Plantation. Their ratio have a big difference that indicates TH Plantation is not doing well.
Okay, let's look at the leverage ratio for both Ajinomoto and TH Plantation companies. In 2016 to 2018, the trend movement showed that the debt-equity ratio for Ajinomoto companies decreased. It is a good performance because generally a good debt equity is lower than 1.0, but it goes up until 0.17, which is still okay on 2019 and 2020. In 2016 to 2019, the debt-equity ratio for TH Plantation's company shows an increase, which is considered risky for the lenders and investors because it suggests that the company is financing a significant amount of its potential growth through borrowing. Then it decreased back in 2020 to 2.14. Okay, next is the total debt ratio for Ajinomoto companies. Shows a decrease from 2016 to 2018 and increase until 2020. The decrease and increase of total debt ratio in Ajinomoto company is quite good because debt ratio of 0.4 or lower are considered better. For the TH Plantation, the movement of the graph from 2016 to 2020 increased where the value of all total debt ratios exceeds 0.5. A high ratio indicates that a company may be at a risk of default on its loans if interest rates suddenly rise. Overall, I can say that the company Ajinomoto is very good in debt equity ratio and total debt ratio because the value of the two ratios is not very large and can still be controlled. Furthermore, for equity ratio, company Ajinomoto shows a graph in which only a few changes occurs, which is not really visible. Basically, the trend movement from 2016 to 2018 is up and down until 2020. For TH Plantation, the graph shows decrease from 2016 to 2020, which give higher risk to the creditors. It's a sign that the company is over-relying on equity to financing their business, which can be costly and inefficient. Equity ratios with higher value generally indicate that the company is effectively funded its assets requirement with a minimal amount of debt. So, high equity ratio is considered good. In addition, for the long-term debt, company Ajinomoto and TH Plantation shows a decrease from 2016 to 2019, which means the long-term debt ratio should never be greater than 1 because that would tell us the value of debt was greater than the value of assets. Obviously, owing more than that we are worth is never be a good thing. So the increase in a long-term debt in 2020 for both company means that it's still safe but only less than 0.5, which means Ajinomoto companies is considered a good definition to indicate the safety and security of a business. So performance of Ajinomoto company is better in the aspect of leverage ratio compared to the TH Plantation company.
For gross profit margin, these two companies fluctuate in all 5 years. TH Plantation show upwards trend movement in last 3 years that indicate the company has good performance. In 2018, show the trend slightly increase until 2019 and keep maintained until years of 2020. It reflects that the company has successful company's executive management team is in generating revenue, considering the cost involved in producing their product and service. In 2020, these two companies have no significant difference because the ratio for Ajinomoto Malaysia Berhad is 0.31 while TH Plantation is 0.30. Next is net profit margin. As you guys can see, Ajinomoto show that the trend movement maintained for the last 3 years that indicate the company has good performance, while TH Plantation show a bad performance because they reached negative value for years 2018 until 2019 and increased back in 2020. But as a general rule of thumb, a 10% net profit margin is considered average. Therefore, Ajinomoto Malaysia Berhad still in stable position, while TH Plantation must do something to avoid from face more loss. So let's continue with return on asset. Ajinomoto show upwards and downwards movement trend but has decreased in 2018 until 2020, while in 2018 TH Plantation showed the lower trend movement that has reached negative value until 2019. In 2017, Ajinomoto is in good performance. It represents the highest movement trend compared to TH Plantation. For return on equity, show Ajinomoto as the highest movement trend in 2017 compared to TH Plantation. It indicates that the company is using fund effectively. And in 2019, the company of Ajinomoto Malaysia Berhad has slight different in the graph from 2018, while TH Plantation has bad performance that reached the lowest trend movement but slightly increased in 2019 until 2020. Okay, a higher ratio indicates a company is more effective at generating profit from its existing asset. So overall, I think Ajinomoto give all the best performance rather than TH Plantation. That Ajinomoto indicate how efficient they generate profit and value for shareholder.
Before we determine which company is the best to invest, let's listen to the SWOT analysis for both companies.
Hi, I am a representative to TH Plantation Berhad to discuss about the SWOT analysis of the company. SWOT TH Plantation. Now, I share about strengths. Strengths are the firm's capabilities and resources that it can use to design, develop and sustain competitive advantage in marketplace. The first strength for TH Plantation is track record of innovations. TH Plantation has a good track record of a consumer-driven innovation despite the fact that other competitors in the consumer also aim to innovate. The second strength is wide geographic presence. TH Plantation has a large dealer and associates networks which not only assists in providing efficient service to consumer but also in handling competitive issue in the food processing business. The third strength is the high margin compared to the food processing industry competitors. Despite having a downward pressure on profit, TH Plantation sustain higher profit margin than competitors. Next is weaknesses. Weaknesses could be the absence of strength or the lack of resources or competencies the organization needs but does not have. Decision maker must be confident if the vulnerability exists due to the lack of strategic preparation or strategic decisions. The first weaknesses is business model of TH Plantation can easily imitated by the competitor in the food processing industry. To overcome this obstacle, the organization must create a platform model that can link supplier, vendor and end customer. The second weaknesses is low investment into TH Plantation customer-oriented service. This may result in rival acquiring and age soon. TH Plantation should expand its investment in research and development, particularly in customer service-oriented solutions. The last weaknesses is declining market share of TH Plantation with increasing revenues. The food processing sector is expanding at the quicker rates than corporations. In such a case, TH Plantation must thoroughly study the numerous customer trend and determine what is the must to do promote future development. Now, I will share about opportunities. Opportunities are potential areas where the firm can identify potential for the growth, profit and market share. The first opportunities in online space. Customer increased acceptance of online service will also help the TH Plantation to supply new offers to customers in the food processing business. The second opportunity is lower inflation rates. The low inflation rate is increased market stability and allow the foundation client to get financing at reduced interest rates. They will raise the demand for TH Plantation product. The third opportunity is accelerate technological innovations and advance. This increase industrial efficiency and enable suppliers to make a diverse range of products and services. This can considerably help their plantations in expanding into related goods. The last of SWOT analysis element is trade. Threats are variable that might provide possible risk to a company business model because of change in macroeconomic circumstances and changing customer views. Threats can be reduced but not eliminated. The first threat is competitor catching up with the product developments. Even though the TH Plantation is now the leader in product innovation in the food processing markets, it faces severe competition from both foreign and domestic companies. The second threat is a shortage of skilled human resources. Given the high turnover of employees and increased independence on innovative solutions, companies can face skilled human resource challenge soon. Last but not least is growing technological expertise of local players in the export markets. One of the most serious of the partnering with a local business in the export market for TH Plantation is the risk of losing intellectual property rights. Imaginations, popularly in China, particularly in China, the intellectual property rights framework is weak.
I am a representative from Ajinomoto company would like to present about SWOT analysis of this company. Number 1, the strength of Ajinomoto is strong brand recognition. Ajinomoto Malaysia brand are well known in the chemical manufacturing business. This has allowed the corporation to charge a higher price than its competitors in the chemical manufacturing industry. Number 2, diverse revenue model. The Ajinomoto has expanded its operation beyond the basic material industry throughout the years. This has allowed the corporation to diversify its income stream outside the basic materials industry and the chemical manufacturing sector. Number 3, the strength is market leadership position that shown the chemical manufacturing industry, which is Ajinomoto Malaysia holds a significant market leading position and it has aided the corporation in quickly scaling new product success. The last one for strength of Ajinomoto Malaysia is they have a talent management and employee skill development because human resources are very important to Ajinomoto Malaysia performance in the chemical manufacturing business. Next, the weaknesses of Ajinomoto. Number 1 is high cost of replacing existing experts within the Ajinomoto Malaysia, which is a few employees oversee Ajinomoto Malaysia knowledge base and replacing them will be exceedingly difficult under the current circumstance. Number 2, the weaknesses of Ajinomoto is loyalty among the suppliers is low. It's given Ajinomoto Malaysia's track record of creating innovative approaches to reduce supply chain price. Number 3 is extra cost of building new supply chain and logistics because the internet and artificial intelligence have substantially affected by business model in the basic materials market. And with the dealer network becoming less important, Ajinomoto Malaysia must establish a new strong supply chain network. This may be highly cost. After that, the opportunity for Ajinomoto. Number 1, customer preference are fast changing because customers today are more likely to experiment or test new items in the market. Owing to increased disposable income, easy access to information and rapid acceptance of technical products, Ajinomoto Malaysia must closely watch changes not just in the chemical manufacturing business but also in the broader basic material sector. Number 2, the increasing government regulation that basically laws that define the limitation of lawful activity, making it difficult for unrecognized actors to function in the chemical manufacturing business. This may present a chance for Ajinomoto Malaysia to expand its consumer base. Number 3, the trend of customer migrating to higher-end product and it proved a significant opportunity for Ajinomoto Malaysia, given the company was high brand awareness in the premium market and customers have had positive experience with Ajinomoto Malaysia brands in the lower segment. It might be a win-win situation for the organization and a chance to boost profit. Number 4 is rapid expansion of economy because the US economy is improving quicker than any other developed economy. Ajinomoto Malaysia will be able to expand into the US market. Ajinomoto Malaysia already has experience operating in the tough US market. Lastly, the threat of Ajinomoto. Number 1 is distrust of institution and increasing threat of legal action for Ajinomoto Malaysia regulation and law enacted by the World Trade Organization (WTO) are difficult to enforce in various areas. Legal proceedings have become costly and time-consuming. It may result in Ajinomoto Malaysia investing less in emerging markets, leading in slower development. Number 2 is competitive pressure for the basic materials industries, new product launch timelines, and shortening. It has increased the competitive demand on companies like Ajinomoto Malaysia because its too enormous client base is unable to adapt swiftly the demand of the area that disruptors are focused on. Number 3 is changing demographic. As the baby boomers retire, the next generation is finding it difficult to replace their spending power. This may result in better earnings for Ajinomoto Malaysia in the near term, but worse margin in the long run, as young people are less brand loyal and more receptive to experimenting.
Okay, after discuss and elaborate all the facts, so which company is the best to invest? Okay, we chose Ajinomoto Malaysia Berhad over TH Plantation. This is because the company overall has reached good performance compared to TH Plantation. In addition, they show that they are well prepared and ready to face any risk in the future. Besides, it shows their management team is more efficient and organized in carrying out their daily work activities. Also, Ajinomoto is the product that everyone use, and they should look for it when they run out. So I think that the Ajinomoto Malaysia Berhad has a bright future and will come up with a good result for their company. Thank you.